This video is about my experience trading options and what I intend to do moving forward to improve my odds of success and make more money. I've got my son with me, so if you hear him in the background, my apologies. Bear with me, please. But before we get into this video, I want to give you an analogy that will give you insight into why I choose to trade options the way that I trade options. The boiled frog experiment. This is a theory. Frogs scientifically don't do this in real life, but this experiment, this theory is very intriguing. So if you take a frog and this is the theory here. I'm getting into it right here, right now. So you take a frog and you drop the frog into a pot of boiling water. The frog is going to jump out immediately because it's going to know that this water's too hot. It doesn't like it. It knows that it will die. So it will jump out because it needs to preserve its own life. But if you take that frog, you put it in lukewarm water and slowly but surely increase the temperature of the water by 1 degree, the frog will not notice a difference because evidently, or based on this theory, it's a cold-blooded creature. It adjusts its core temperature to its environment, and 1 degree is comfortable. It's cool. And so it will stay in the water as you periodically, systematically, but consistently increase the temperature until it boils to death. Whereas when you immediately put it into hot water, it jumps out. But if you raise the temperature slowly over time, it cooks to death. It doesn't realize that it's being boiled to death. That analogy is important because I want to tell you why, as a trader trading options, I felt like I was a boiling frog. I blew up several accounts. I blew up my account several times. I've taken it down to 0 multiple times, starting from like a lot of money. But that doesn't matter because my will to succeed is stronger than my agony and my failures. my mental agony and mental failures. So what I discovered in my trading is that the longer I stay in a trade, the greater the probability that it goes against me. And all of my losing trades have always been because I stayed in the trade too long. This is with options. Options have an expiry. And I always try to get the max profit of the option. Which leads me to think about like the boiled frog. I felt like I was being a boiled frog trader. Like I was being boiled and I didn't know. I'm in these trades and I'm trying to stay in them for the max profit. Meanwhile, the core temperature of that trade is rising and rising and rising, and it's cooking me alive. And I don't even know until it's too late, until I've been burnt. So this is why my new strategy, my new trading strategy is deliberately and specifically to scalp. Scalp is in and out. Well, not necessarily in and out because you can generate too much commission costs. I got to be mindful of the costs and fees of trading because I don't want to incur too high of a cost. But at the same time, I must focus and work on this part of my trading to get out quickly and not fight the urge, fight the greed for max profit. This is where I'm at. Okay, so now that you understand my position of not staying in a trade for too long because I'm scalping, this is my plan for the coming week. So my starting capital for the week is $1,219. My end of week profit target, the goal, is $40, which is a 1% return approximately of that $1,219 starting capital. My objective is to do 2 or less trades. If I could just do 1 trade and receive my 1%, that's fine. But 2 or less trades, I will not exceed more than 3 trades. If I incur a loss of more than $120 during the week, I will immediately, expeditiously stop trading because that's too big of a loss. My preference, though, is if I do incur losses, to try to cap that loss at $40, which is approximately 1% of my total starting capital. And then, so basically, my risk to reward for the week is a 1-to-1. That's what I would like. I don't want to lose more than $40, but I can stand to stomach a loss of $120. I will not push it that far, though. So yeah, that's very important. The underlyings that I will be trading this week is CCJ, which is Cameco, ALB, which is Albemarle, IWM, which is the Russell 2000 index, and XSP, which is the S&P 500. It's the S&P 500, but it's like the minis, because it's 1/10 the size of the actual SPX. So those are the underlines that I will be trading. I invite you to follow along this week for my next video next week. I'll give you an update on how it went, all the details, and I'll just share with you the information that I learned throughout the week about trading. So stay tuned. Wait, before I go, I just want to elaborate a little bit more on the risk of a scalping strategy. The risk, though, is still there. You never really escape risk when you're trading, investing, or anything like that, because the market giveth and the market also taketh away. And so you can't guarantee what you earn from the market. The market has to give it to you. But you can only lose what you put up to be lost. The market will only take from you what you put up to be lost. And when I'm trading, I understand that every time I enter a trade, the level of risk and exposure of that particular trade is what the market can totally take from me at any time. And so by scalping, going for small dollar amounts, I've heard that people say, traders say on YouTube, online, threads, it's like picking up nickels in front of a steamroller. And so one loss, if it's too large, can literally eradicate months of small gains. And I understand that risk, and I implore you to also understand that risk. And it's okay, because the aspect of this that I think will go unnoticed, or like the part about this type of strategy is discretion. Like, I choose when to go into a trade and leave a trade. I make that choice. And I believe that discretion could really avoid massive losses. Discretion is critical, because I put trades on, and I'm sure if you've traded options for any amount of time, well, a lengthy amount of time, you'll notice like you're profitable within a certain duration, right? Very quickly, or at least the type of trades that I placed. Like, I noticed, like, damn, I could take this money right now, but I don't. And that's where I fall into that boiled trader, where I'm like a boiled frog trader, where I'm like a boiled frog. I see the money, I could have taken it, but I didn't. I stayed in the trade, and then boom, got steamrolled later, got burned. And so that's where I feel like with discretion, I can cap my losses, but really amplify my scalping. Like, just still do the same type of trades, but when it reaches my profit targets, take it. Don't stay, don't push it, don't try to get the max. And so those are the risks of collecting small dollar amounts, small percentage, 1% a week on my account, with the risk of actually losing 100% of the account, blowing up. That's the risk. or having a winning streak for months and then having one major loss that wipes out all the month's gains. I'm okay with that because I truly believe that over time my confidence will build back up again after taking such massive, devastating losses. These small gains will build me back up, keep me focused, keep me on the right track so that I can progress.